Gold commands global respect due to its inherent value and storied past, acknowledged by diverse cultures spanning millennia. Around 650 BC, gold-infused coins entered historical records, and roughly a century afterward, King Croesus of Lydia introduced the inaugural pure gold coins. Over the ages, individuals have clung to gold for a multitude of motives. Societies, and presently economies, have assigned significance to gold, thereby upholding its enduring value. This precious metal becomes our refuge when alternate forms of currency falter, ensuring its consistent worth as a safeguard during challenging periods. So, why should you invest in gold? In stark contrast to paper currency, minted coins, and various other assets, gold has steadfastly upheld its worth across the epochs. Individuals perceive gold as a means to transmit and safeguard their wealth through successive generations. Since antiquity, people have esteemed the exceptional attributes of this precious metal. Gold boasts an immunity to corrosion and the ability to undergo liquefaction through an ordinary flame, rendering it malleable for crafting and suitable for imprinting as coinage. Furthermore, gold boasts a distinct and captivating hue that sets it apart from other elements. The atoms within gold possess greater mass, propelling electrons to swifter motion, resulting in the absorption of specific light wavelengths, a phenomenon that necessitated the application of Einstein's theory of relativity for its comprehension. While the US dollar holds a paramount position as one of the globe's primary reserve currencies, instances of its depreciation against other international currencies, such as the observed decline between 1998 and 2008, often trigger a surge of interest towards the reliability of gold, culminating in an elevation of gold prices. The value of gold experienced an almost threefold surge between 1998 and 2008, culminating in the significant milestone of $1,000 per ounce in the initial months of 2008. Subsequently, between 2008 and 2012, it witnessed an almost twofold ascent, surmounting the $2,000 threshold. This weakening of the US dollar can be attributed to an array of factors. Notable among these are the nation's substantial budgetary and trade deficits, coupled with a substantial augmentation of the money supply. Across its historical trajectory, gold has consistently proven itself as a robust safeguard against the erosive effects of inflation. This is attributed to its tendency to appreciate in value in response to upticks in the cost of living. Over the past half-century, investors have witnessed remarkable surges in gold prices coinciding with plummeting stock market performance during periods of pronounced inflation. This phenomenon can be understood by the fact that as fiat currency undergoes a decline in its purchasing prowess due to inflation, gold, denominated in those same currency units, typically undergoes a parallel ascent. Furthermore, gold's role as a dependable reservoir of value enhances its appeal as a store of wealth. This prompts individuals to consider acquiring gold, particularly when they perceive their domestic currency as susceptible to devaluation. Deflation, characterized by a decline in prices, a slump in commercial activity, and the economy grappling with an overabundance of debt, has been historically defined by its rarity. It last pervaded the global stage during the Great Depression of the 1930s, with limited instances of deflation emerging following the 2008 financial crisis in select regions. Amid the Depression, the comparative buying influence of gold experienced an upsurge even as other prices underwent a stark descent. This phenomenon was rooted in the populace's inclination to amass cash reserves, with gold and gold coins emerging as the most secure repositories for currency at the time. Gold's enduring value isn't solely confined to periods of financial ambiguity. It extends to moments of geopolitical instability as well. It has earned the moniker of the crisis commodity, due to its propensity to offer a haven of relative security when global tensions surge. Amid such junctures, gold frequently surpasses the performance of alternative investments. Its valuation commonly ascends significantly when trust in governmental entities wanes, emerging as a preferred choice for safeguarding wealth during times of geopolitical uncertainty. Much of the gold supply introduced to the market since the 1990s has been sourced from the sale of gold bullion held in the reserves of international central banks. This practice of bullion sales by global central banks experienced a marked deceleration in 2008. Simultaneously, the extraction of fresh gold from mining operations had been on a downward trajectory since 2000. According to Bullion Vault, the annual output of gold from mining operations declined from 2,573 metric tons in 2000 to 2,444 metric tons in 2007. Subsequently, gold production underwent a decade of ascents, culminating in its zenith at 3,300 metric tons in both 2018 and 2019, before tapering to 3,000 metric tons in 2021. The recent drop in production signifies the potential for renewed strain on the global gold supply. The establishment of a new mining operation can demand a span of 5 to 10 years. By and large, a contraction in the availability of gold tends to propel the elevation of gold prices. In preceding years, the burgeoning affluence of emerging market economies has propelled a surge in the appetite for gold. Within numerous of these nations, gold is an inherent facet of their cultural fabric. A case in point is China, where gold bars are a traditional vehicle for savings, sustaining an unwavering demand for the precious metal. India, ranking as the world's second-largest consumer of gold, boasts a myriad of applications for it, most notably in the realm of jewelry. Thus, the Indian wedding season in October traditionally ushers in a period of heightened global gold demand. Notably, the yearning for gold has experienced an upswing amongst investors. An increasing number recognize commodities, with gold at the forefront, as an investment category warranting a share of their financial resources. A telling example is the SPDR Gold Trust, GLD, which has ascended to become one of the most substantial and actively traded exchange-traded funds, ETFs, in the United States. A myriad of channels exist to incorporate gold into investment portfolios. One can opt to possess the tangible metal itself, available in the forms of bullion, coins, or even jewelry. Yet, it's crucial to recognize that the upkeep, storage, and insurance of physical gold holdings might entail substantial expenses. Alternatively, one can consider investing in a gold exchange-traded fund, ETF, a versatile option that allows for exposure to gold's price movements without the need for direct ownership of the metal. Another avenue entails acquiring shares in mining companies that are actively involved in the extraction and production of this prized commodity. This offers a way to align with the gold sector's dynamics while diversifying investment strategies. In conclusion, gold's enduring allure and significance have transcended time and cultures, making it a resilient and cherished asset. Its reputation as a safeguard against inflation, deflation, geopolitical uncertainties, and economic downturns remains firmly established. While its role has evolved from its historical use in trade and currency to a modern investment instrument, its intrinsic value remains steadfast. From its utilization as a hedge against financial turmoil to its incorporation in investment portfolios through various avenues, gold continues to shine as a tangible and symbolic representation of wealth and stability. As the world progresses, the enduring value of gold persists as a testament to its role as a timeless asset that resonates across generations and civilizations.